Hi and welcome. Today we're going to be talking about an idea around all banks going fintech. This is a very broad topic and we're going to do our best to give it justice in about 20 minutes. We're going to try to cover the key aspects of banking, transactions, data. We'll also look at wealth management, but we're also going to hope to go beyond just the tech and the product and actually look at some of the other attributes that's required to support banks to become fintech-like in the way that they operate. So let me start by introducing myself. My name is Corey Thompson. I'm the head of digital product for HSBC here in Hong Kong. I'm also the co-chair of the Digital Banking and Payments Committee for the FinTech Association of Hong Kong. The FinTech Association of Hong Kong is a not-for-profit independent association. We're led by a volunteer group of board members and committee co-chairs who care deeply about the future of fintech here in Hong Kong. If you haven't heard about the FinTech Association or you'd like to know more about the FinTech Association of Hong Kong, please visit FTAHK.org. Let me now introduce you to allow our esteemed panelists to introduce themselves. Jessica, Neil, and then Chelsea, please take it away.
Hi everyone, I'm Jessica and thank you Corey for the great introduction. I'm one of the founding members of Tanzu, a fintech company based in Hong Kong, and I'm also a co-chair of the digital banking payments of FTAHK. Great to be on the panel today.
Neil.
Thanks, Corey. My name is Neil Tan. I'm the co-chair of the Wealth Tech Committee inside of the FinTech Association Hong Kong.
Hi, my name is Chelsea Perino. I'm the head of marketing for the Executive Center, which is the largest premium flexible workspace provider in APAC. Really looking forward to this discussion.
Awesome, thank you. And thank you for giving your time. So maybe Jessica, I'm going to start with you. With your Plan 2 experience, a startup that works with banks quite a lot. What trends are you seeing with the banks that give you a sense that they're becoming more like fintechs?
Yeah, so thanks Corey for that. So basically just a bit of a background. We started off as a B2C app in Hong Kong. And I think what made us realize kind of that banks, based in Hong Kong are starting to adopt.
What does Plan 2 do for the people that might not know?
Yeah, no. Oh, of course, yeah, sorry about it. Plan 2 is essentially, we have our B2C and B2B arm. B2C wise, we help basically our users manage their finances. We aggregate it in one place and essentially users can look at their insights, get an idea of how their finances are doing and essentially get advice from it. And from our B2B arm, what we essentially do now is enable banks to kind of provide data, data science, data machine learning, and also these type of AI-based technology to enable them to enhance, let's say, their customer acquisition, engagement, as well as digital sales initiatives. So just going back, with that background, just going back to, what made us kind of realize as a company that a lot of banks are, becoming fintech or are pursuing this kind of journey is essentially, when COVID started, this kind of initiative escalated. We were always a B2C company, but we realized that, when COVID started, banks started to realize, they need to start digitalizing, they need to pursue, data-focused initiatives. And our B2B solution actually was triggered by the fact that a bank approached us and asked us if we can actually work with them to actually help develop, let's say, kind of test their mobile banking platform. And so from then on, it was just, we realized, talking to different banks, the transition that we're seeing is that not only in terms of, let's say, it's not just, let's say, they say that, okay, they're becoming fintech, but you see that when it comes down to, talents, the technology adoption, the culture, and essentially the openness to work for fintechs, you see that becoming more prominent. And because of that, in less than 2 years, we were able to work with around 7 banks in Hong Kong, which range from locally based, global, as well as China state-owned banks who want to kind of pursue their fintech initiatives.
Very cool. And you alluded to speed there as well. I guess when we think about big banks and we think about fintech, speed is one of those those things that is often the most contrasted. Are you seeing anything change in that space? You know, for a bank to keep up with the pace of a fintech, particularly a startup that needs to generate revenue and keep moving quickly. Are you seeing any changes there?
Yeah, I think so. In terms of, let's say, traditionally banks might have opted for doing things or doing new initiatives internally, but now they realize that if they work with startups, especially startups who actually have market validated kind of solutions that either the startup itself has already done themselves or they've already applied it to other banks, you know, they're more open to kind of use that because it reduces the time for them to actually think of something new. It reduces the cost as well because they don't need to start from zero. And essentially, you know, they can just go to market feeling a lot more comfortable with their solutions.
Cool. Maybe just building on that, that build versus partner approach, Neil, for you, obviously, when we think about banking and the banks here in Hong Kong, all the way from large incumbents to virtual banks, wealth management is a really key part of the proposition. You know, what are you seeing in the wealth tech space here? You know, robo was a really hot topic, I think continues to be for a long time. And as banks embark on the future of the wealth, you know, the wealth opportunity, what are you seeing? What are they doing there? And how much of that is build internally versus partner?
Yeah, absolutely. I think if we kind of break it down, I mean, essentially the banks, the incumbent banks are doing one of three things. One is obviously building up their existing wealth capabilities, you know, in terms of microservices through fintechs. So, you know, if they have pre-existing product offering journeys, user experience, user interfaces, and so forth, they're building on those to improve those, right? Second piece is going to, you know, B2C piece, which is the direct piece. A lot of them are trying to improve that sort of access point in terms of the existing apps that they have today. The third thing is really in this embedded finance area. Embedded finance, whether it's talking about payments and wallets, lending, or wealth and insurance, all of it is how do you get it onto the different platforms, whether it's their own or to provide that type of service to some of these platform players. So for example, e-commerce players that are interested in offering wealth on their platform to their existing users. That is a big piece inside of a lot of the incumbent banks as well. So for example, Standard Chart has a little bit of advanced you know, launch of their Nexus program, which is a banking as a service or embedded service. And they've already signed up a deal down in Indonesia with Bukalapak, which is an e-commerce platform there. So, you know, HSBC just recently announced banking as a service for their own platform. So a lot of them are going in this direction today. So that's as far as the incumbent banks are concerned. But as far as robos are concerned, in Hong Kong, obviously you have homegrowns like Aquaman and so forth, but a lot of Singaporean ones are coming, either already arrived like Stashaway or are on their way coming up north, right? So folks like Saif and also and Dallas is also coming here as well. So you've got a fair amount of competition there. And, you know, the third bucket, sorry about this, is about the virtual banks, right? And a lot of the virtual banks are also saying, okay, we've got payments and wallets, we've also got lending, we're catering to SMEs. But now the next sort of phase after 2 years of having the license is really wealth. So you've got those three different constituents inside of the market that are developing in very different ways, but all trying to go and develop a wealth proposition. So, yeah.
And you were talking about sort of, I think you used the term embedded wealth. It almost sounds like it's a bit more of a distribution play. How do we take what we have and find new channels and distribution opportunities? Almost a platform kind of play. Is that a growing trend that you're seeing?
Yes, absolutely. I think you know, outside of the pre-existing, it's how do you help, whether it's asset managers or, you know, second, third tier banks, have wealth, digital wealth on their platforms and access those different users today. And that just improves the asset management group, whether you're in Standard Chartered or, you know, in HSBC or BlackRock or elsewhere. to expand the distribution on traditional platforms, right? So if you're talking about e-commerce, if you're talking about healthcare, if you're talking about education, these types of platforms all have this access point to the consumer, and that's what everyone is moving towards right now.
Got it. Thank you. And Chelsea, over to you. So we've focused a bit around the product and the tech side of the equation, but when we think about the ingredients to be fintech-like, to be startup-like, it goes beyond just the tech side. There's a lot of other sort of enabling factors there, whether we think about, you know, the ways of working, location strategy, collaboration tools. I'd love to hear from your side what you're seeing the bigger banks do, particularly that's helping them become more fintech-like.
Thanks, Corey. So I think one of the things that you pointed out earlier, which is this idea of speed to change and speed to delivery, is something that also is a limitation for a lot of the large banks in terms of trying to change their real estate strategy and their collaboration strategy. And when people think about fintech or prop tech, I think one of the words that comes to mind is agility. And so what we're seeing in our industry, which is obviously flexible real estate, is the real sort of acceleration of the adoption of flex strategies as a result of COVID. So I think previously the flex industry was sort of looked at as a Band-Aid solution, a place where you put project teams or people that you couldn't fit into your traditional office. Whereas when everybody sort of got sent home and this whole work from home experiment began, that wasn't something that a lot of the big organizations were really prepared to deal with. And a lot of that had to do with security infrastructure, sort of technology infrastructure, and what people had access to. And I mean, a lot of the information security is something that a lot of these banks are really concerned about. And there was this pre-assumed sort of assumption that if you moved into a flexible space, you lost a lot of that security. And so for the executive center, that was a big focus of ours in working with these big banks, particularly, was to help them understand that if you're working with the right partner, you can actually build all of those sort of infrastructural commodities into a flexible workspace, at least with the executive center. And so it's been really exciting over the last couple of months, you know, six to 12 months, to see this shift in perspective where these big organizations are saying, wow, technology has become really important. People care about flexibility. They want to be more agile. So this could be an opportunity for us. How can we leverage this network of space and look at our larger portfolio as opposed to being sort of very micro focused on one office in one city? How can we take a step back and look at the larger, more long-term infrastructure of our office space, and then tie that back to some of these sort of progressive ideas moving into the virtual banking and banking as a service and all of these things, which requires fundamentally the business units to be more agile.
Yeah, and maybe just to kind of build on that a little bit. So we talked about sort of location, space, and strategy. If I think with a HSBC hat on, I'm sure it's the same for other big banks. You know, if we wanted to sort of spin up something and incubate it and have that kind of be outside of the mothership and move quickly, there's obviously where these things come to bear and really make an impact. Does it also, when we think about this, it's not, I assume it's not just the space, but then it's being able to spin up cloud environments, being able to kind of tap into Slack to be able to get the collaboration to happen. Is this, are you seeing these types of trends, and is that sort of part of the strategy in your space as well?
Well, absolutely. I mean, for us, we have different products that we sell, right? We have private offices, we have collaborative co-working kinds of spaces, we have virtual office, and then all of that has a big cloud service sort of umbrella over all of it, right? I think one of the other insights that has been realized and also accelerated by COVID is that organizations really don't have a very good understanding of what their people actually do on a day-to-day basis and what kind of tools they need and what kind of spaces they need to make that most productive and most beneficial for them. So a lot of the conversations we're having now actually take a step back, and we kind of look at ourselves like consultants and ask those questions, because it's actually kind of funny that a lot of people aren't really thinking about that, or they weren't in the past, right? Yeah. What teams need an office all of the time? What teams need it 50% of the time? What teams want it 100% of the time, right? There was sort of this overlying assumption, and really on a sort of right below the surface level, maybe some organizations started thinking about it within the context of departments. So, you know, the traders need to be in the office because they need their screens and they need access to the terminals and et cetera, et cetera. But maybe the salespeople can be a little bit more mobile because they're going to see clients anyway. So, but what the realization has been is that it's actually much more complicated than that. So you really need to start looking at it at a much more personal level.
But on the flip side, COVID's kind of called myth on a lot of those assumptions as well, right? We've been forced to do things that we didn't think was even possible because we had to, and actually we moved forward and things moved on. And picking up on a point that actually Jessica made earlier, which was around talent, and thinking about just listening to some of the points that you're making, are you seeing any changes in the talent mix? And in particular, I guess, going to the point you were making, you know, everybody was in the office once upon a time, then everybody was entirely out of the office, and now we're sort of partly in the office. And, you know, remote working kind of wasn't as bad as everybody thought it was going to be. Are you seeing anything where actually, you know, companies and particularly larger banks are actually rethinking their location strategies from an individual perspective? So, you know, everybody had to be onshore in Hong Kong to do this, but maybe now they don't need to be. We can get the right talent wherever they need to be.
Absolutely. I mean, a lot of the conversations that we're having with our clients now, particularly larger multinational organizations that have lots of offices, are how do we enable mobile global workforces as opposed to, exactly as you mentioned, focusing on just the people and just the talent in one particular city, right? And one of the ways that we're doing that is talking about, you know, global co-working access passes that can be shared amongst large groups of people across multiple locations and multiple geographies. I mean, that's just one example. But I think just this idea of a higher level of flexibility and autonomy, which was not synonymous with traditional banking pre-COVID for sure, is something that it is really starting to impact that talent pool that you mentioned, right? So, and I think also this work from home experiment in the beginning was great for everyone. People were so excited. Oh my gosh, finally, I don't have to be in the office 9 to 5. I get to work from home all day. Well, very quickly, most people realized that the grass is not greener on the other side for a myriad of reasons, which I'm sure we've all experienced. You know, kids, dogs, partners, construction, bad Wi-Fi, et cetera, right? And so I think what's exciting for us is it's this period of time, ironically, has kind of revitalized the appreciation for the office, but also made it much more tangible that it's more than just a space, but you need to understand how it works and how it fits into the larger infrastructure, which I'm sure both Jessica and Neil would have the same sorts of comments through their own verticals.
Yeah, and I guess, Jessica, coming from a company that is geographically dispersed sort of from inception, you know, I'm sure some of these points resonate with you. So Plan2, I guess at its core is a data company, really. And, you know, data is the lifeblood of any modern business, and in particular in banking. I think that it's probably fair to say that historically incumbent banks didn't invest as much as perhaps they should or could have in this space, but it's certainly a hot topic now. And I think, you know, I, from my own vantage point, I see a lot of investment going into that. And there's a recognition of the value of data really now. From where you sit and in Plan2 and the work that you do with banks, what are you seeing in that space? Are you seeing that mindset shift, and are they, you know, again, coming back to collaboration versus build? What are the trends in, and particularly the types of data services that you work in, transactional data, spending, analysis, etc.?
Yeah, for sure. I think one of the biggest challenges that banks face is the fact that they're building on legacy systems. So it tends to not be very flexible when it comes down to data, whether it's data transfer, data analysis, or even just kind of inserting, let's say, ML or AI models within that infrastructure. So we definitely see that, but because banks are realizing that it's so important to have that infrastructure in place, there's this openness to get, let's say, our company involved in, you know, building the right, let's say, data labeling platforms, data enrichment platforms to enable them to actually, you know, process their data faster, cleaning their data faster, and producing useful insights so that they can actually get business value from it.
Yeah, And what about from, I guess, an architecture perspective, without going into too much detail? You were kind of alluding to, lots of banks. If you trace the data path, there's a legacy system at the end of that somewhere. Data's not necessarily easy to get out. It's certainly not real time, but we're seeing a lot of interesting, whether we call them data lakes or data clouds, where that data is being abstracted and being able to be modeled and used in kind of a more real time way. That seems very fintech-like to me. I mean, what are you seeing in that space? Is that a trend across the board, and how important is that?
Yeah, definitely. I think a lot of these banks, essentially, because our solutions can be done on premise, they're really open for us to get in there, understand their current system, and then realizing, how do we actually link it so that our model can link to, even if it's a legacy system, build that link from their data, combine it together, and then push it through the model that we implement. So, no, for sure, I think that's the basic or fundamental solution that the banks need to implement for them to even want to attempt to, go beyond, let's say, personalization and all of that, because without this, it's impossible for banks to do any personalization efforts.
Yeah. And Neil, back to you on the wealth space. I mean, we won't be able to talk about wealth and not mention GBA. It's probably the hottest topic in the market at the moment. And I think just yesterday, the HKMA and the PBOC announced a joint sandbox. I'm curious to know your views on that, and in particular, what that means for banks that want to be more fintech-like.
Yeah, absolutely. I think, finally the GBA has been launched. 19 different institutions have been authorized to, start selling product on the platform. I think 3 are going southbound only. The other 16 are both north and south. So at the end of the day, I mean, this is probably the single largest opportunity within China at this point. I mean, this whole configuration between Macau, China, and Hong Kong. At the end, we're talking about a couple $1 trillion worth of opportunity there. So a lot of the banks are trying to facilitate the digitalization across those different channels because currently there is some limitations there as far as trying to open up different bank accounts and so forth. What is key, as you mentioned, is this recent signing of the MOU between the PBOC and HKMA to facilitate open sandboxes that they already have today, and to link these two together. And the point being is that how to facilitate the interoperability of these different systems when you're crossing these different borders. So this is a huge opportunity and a huge step for the overall GBA strategy and how to integrate all the financial systems here. So.
And I think really having kind of that experimenting, test and learn mindset that fintechs do, sort of, and being able to work in a sandbox to develop new products and services is certainly a step in the right direction.
Absolutely, 100%.
So I think we're hitting the top of our 20 minutes. That went way too fast. Hopefully, if anybody's tuned into this, you found the session interesting. We've only managed to just scratch the surface, but hopefully you've enjoyed the conversation nonetheless. I certainly have. I want to thank Jessica, Neil, and Chelsea for your time. Thank you very much. And again, on behalf of the FinTech Association, please check out what we do and please consider a membership. Members make this organization be able to do the great things it does for the ecosystem here in Hong Kong. Thanks, everyone.
Thank you.
Thank you.